This company was recently backed by an e-commerce giant. And its share price then proceeded to go up by 350%. Take a guess. What company is it? Well, pause this video and leave your guess in the comments below. So, my name is Andrew Stotz, and this is Uncovered Asia, exploring interesting stocks in Asia that few institutions and analysts cover. The company today is YTO Express International Holdings. So remember, this is not a recommendation. This is an exploration. So what is this company? Well, it's an international logistics business listed on the Hong Kong Exchange. It's a Chinese company, but it's listed in Hong Kong. The company operates in China, Europe, North America, and the rest of Asia. There's 5 business segments: air freight, ocean, logistics, international express, and others. Let's look at air freight. Well, it arranges cargo shipment logistics via air travel. First, they obtain the cargo space from the airlines, then they prepare the documentation, and they arrange customs clearance. Then they handle the cargo shipment. And let me tell you, that can be a lot of trouble, that paperwork. Like air freight, except by ocean, they do ocean freight. But shipping volumes, of course, have been affected by the trade tensions. They were down about 10% in 2019. Now, logistics, mainly it's warehousing, packaging, labeling, and pickup and delivery. You see that picture at the bottom left? I remember when I was in China at my university where I did my PhD, the motorcycles would all converge on a corner and they'd dump all their boxes and they'd be scanning all of that. That just reminds me of those days. And let's continue. The International Express, well, it's cross-border delivery, and this is mainly driven by e-commerce. And of course, the last one is trucking sales agency. So if we look at the breakdown, it's mainly air freight and ocean freight and international express. And if we look at it from a geographical perspective, almost 70% of the business is in China. The rest is divided equally. Now, the share price has rallied by 355% in the last 3 months. And the volatility, of course, is massive. So, and the beta is a little bit weird because the stock moved very different than the market. Now, let's look at the company using my FVMR scorecard. It considers a stock's investment attractiveness relative to stocks in that region or country. And I'm talking about attractiveness relative to 4 elements: fundamentals, valuation, momentum, and risk. People often ask me, Andrew, are you a value investor? Well, actually, I look at all 4 of these factors. And I consider a company over 5 years, and you'll notice in the table I'm about to show you that PTM stands for past 12 months. Finally, I rank companies. I rank each of these measures: fundamentals, valuation, momentum, and risk, on a 1 to 10 scorecard. Of course, everybody wants to be number 1. So you can learn more from the description in the video below. And here we can see fundamentals are very, very strong. It's ranked as number 1 or best. Valuation, slightly expensive, but I wouldn't say it's terrible. Remember, right now I'm benchmarking against 520 non-financial companies in Hong Kong. And momentum is excellent, particularly in recurring earnings, and we're seeing price momentum clearly. And then risk, well, risk is relatively low. Let's look at it from my world-class benchmarking scorecard, which helps me to identify a company's competitive position relative to global peers. I call this, I use a composite score, which is a composite score of profitability and growth, which I call profitable growth. And I consider a period over 5 years, and again, PTM is the past 12 months, and I'm looking for best. You can learn more about the world-class benchmarking scorecard below. So here we can see the scorecard shows that the company has been ranked number 1 or number 2 for 3 out of the 5 periods that I'm showing here, including the past 12 months. So doing very well. And of course, that's measured against 1,340 medium industrial companies worldwide. Now, if we look at the source of the profitable growth, it's coming mainly from profitability, which is ranked number 1, and it's coming partially from growth. Now, there is a lot of volatility we can see in these numbers. 2019 was a very tough year for everyone, but it's doing well so far this year. So overall, this would be a world-class company. So why the price rally? Well, recently Alibaba increased its stake from 10.5 to 22.5. And of course, the share price soared right on that day. And the logistics business has been booming as China consumers increase their e-commerce spending amid COVID. I guess everybody's been doing that. And it's only a small part of the picture. Alibaba has invested in several logistics companies in recent years due to fierce competition with JD.com, and JD.com operates its own in-house logistics network. So Alibaba's other logistic company investments include YTO Express and Best. So I would expect that Alibaba is building out and could really see this share price do very well. So you're now an expert on this company. Well, not really. In fact, I've got a project for you. I want you to share your analysis on this company. Take a look at it, see what you think. My name is Andrew Stotz. That is Uncovered Asia, where we're exploring interesting stocks in Asia that few institutions and analysts cover.